All right, good morning. Welcome to the weekly meeting, 11:18. East is your show, if you got a voice.
Yeah, I can make it through drinking water. Hmm. Hey everyone. So I've been doing the what is it, the order blocks, and the way I'm looking through these trades and narrating them for y'all is just the way I look at how it should be or not how it should be traded or how I would trade them, right? And to see where, of course, how we could possibly get in these trade and maximize on the move of the week, right? Because this is swing trading. I saw this from ICT and I was like, oh, I like you. This is me. I'm in it. So without further ado, I'm gonna play the video. Um, you could go back to it and I'm gonna pause it and tell you guys to screenshot it. As a matter of fact, what can y'all see on my screen? Y'all only see the video, right? Y'all don't see anything else?
That's correct.
Okay, so screenshot, and when we get a little further, you screenshot again, and just pay attention to what he says about liquidity, and that's it. I'll let it start playing. Where is my play button?
Hey, before you, East,
Mm-hmm. Yeah.
do do
Hello?
you what video is this? I see it's core
This,
content, but
okay. So and I'm always long-winded with my answers. I'm so sorry. But this is his core content. So for anybody who started out with ICT 2022, um, and he's explaining his core content, like if you're a beginner, you're like, I don't even know. His core content is where to start. Those are really good videos. Okay. So he has month one, two, three, like I think he goes through like a whole year where he just spends a whole year with everybody. So I'm at core three. And after that, I said, this is awesome sauce. And I stopped here. I did 4-2. But this is core three. I was going to go on to core five, but I just stopped here. I didn't need anything else. But you could continue going through all his core series. Okay. This is month three. Mm, okay. You want me to press play?
yeah. I just want
Okay.
to.
Go. Oh, a video.
I don't think there's sound.
East,
Yes.
we can't hear it if it's playing.
Oh, for real? Oh my God. Okay. Let me bring it back. Mm, 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 mm. Y'all can't hear anything? That's crazy.
You don't have it on mute, do you? Are you muting
No.
yourself?
Uh-uh. All right. Can you hear anything now?
No,
Can you hear anything now?
no.
Oh, this is horrible. Mute. Oh man. Okay, let me switch over to the iPad. Hold on.
Milo, Milo.
Stop playing.
I don't know why I can't get why it's not playing. You guys can't hear it. That's so sucky. Um,
You can. It's playing for you, East.
yeah, I can hear it.
Hmm.
Okay, forget it. I'm just gonna get on here.
Well, maybe I can pull it up.
Todd, it's got to do something with her settings. I mean, this happened to you long time ago. You probably not have to play that for her. I can't tell you what it is or how to fix
Oh,
it, but I
share
remember
sound.
it happening.
How about now? I looked at share sound.
Of lower time frame chart.
Perfect. Perfect.
Thank you. Okay.
And again, outlining why the buy stop liquidity was ran out. 4-hour chart of that price swing. You can see the price swing here, high, that's this move here, this whole price swing. And we're going to look at institutional sponsorship throughout the entire price swing. And you probably already noticed there's some blue line segments on there. So we're going to start talking about some super secret sauce. We're looking at now a 60-minute chart. And I want you to take a look at the reactions that happen from the blue line segments. Okay, and I want you to look at it real close. Those blue lines are one of the coolest things I discovered about price action. And not only is it indicative of what future price direction may be, but it also gives us prognostication for future setups. It doesn't just give us a right now what should be support or resistance. It gives us a future prognostication for where setups may unfold at a later time. So let's zoom in a little bit, okay? And I'm going to add, again, the levels on those short-term highs, and we're going to note them as the old highs. So every time you see that little gray horizontal line segment, what we're actually drawing your attention to is these old highs here, and that's going to be in the form of those old buy stops. Okay, so again, you can see those gray lines here, and all that's doing is just delineating those old highs in the form of price. Now, I don't want you focusing on price numbers or anything like that. I just want you focusing primarily on price action alone. The delivery of price is all we're interested in talking about specifically for this teaching. Then we have the beginning of the move here. Price trades down, back into, now this is the run below that previous low. So we see price making that low, and then we see a reaction. Then we see price trading lower. Okay, all these down candles is building what? That 4-hour order block. Okay, it's a bullish order block beginning right there. So that high on that candle begins the order block that would be deemed a bullish order block on the 4-hour chart. But because this is a smaller time frame, we're going to have a lot more candles, obviously. So I want you to take a look at the blue line segments. Okay, what I'm delineating there is the opening price at midnight in New York. Okay. If we suspect that price is going to be bullish, we can look at the opening price at midnight in New York. And if we're expecting a price move higher, what we see in the form of institutional sponsorship is price when it goes below the opening price at midnight should be accumulated. So here's the opening price later in the day. This is New York. Price trades higher. Okay, here's the opening price at midnight the next day. We're not concerned about the movement above it. We want to see what happens when price goes below it. Okay, now obviously going below the opening price here, we have what? What's all this?
Inbound.
This is a liquidity void. Okay, price is going to do what? Return back down into an order block. Price does what the very next day? It opens, trades lower, and does what? Rallies. The next day we open, we trade lower, and then we rally. The next day we open, small little move below the opening price, and institutional sponsorship steps in again and sends price higher. The next day, the opening at New York's midnight candle, trades lower again, and what happens? Institutional sponsorship steps in one more time, and they buy it again. Rallies up. We start moving into consolidation, and we'll look at each individual stage in price action as we look at it here. The first one is we have that bullish order block, and price comes back down, it snaps right back into it right here. 5 pips added to the level, you could be a buyer at that point. Again, this is in the London time frame. The next one here is a down candle right at the opening price. In other words, when we find the opening price, and then we're going to be looking for a down candle, that down candle should be seeing capitalization of new longs. We see that come to fruition when the down candle is violated. Okay, so let me go back to this for a moment. We have this down candle here. This becomes an order block that's bullish when this candle trades through it. So at a later time, when it hits it here, you could be a buyer, and it has to be below the opening price of that day. Now, it can happen during London or it can happen in New York. Either one is still a good, viable trade. The next day here, we see what price trade below the opening price. We have a small little order block here, and this one here as well, but we're going to say we're not going to worry about that one because we're trading at equilibrium. Okay, we're going to wait for an order block to form, which we see right here. So between this high here and this low here, we're essentially trading at equilibrium. So when we're at equilibrium price points like that, we want to see price give us an order block to give us the justification for wanting to expand higher and away from that equilibrium. We see the down candle here, draw that out in time, price hits it here, add 5 pips to that level, we could be a buyer, price takes off. We have the opening price here, trades just below it here, the down candle at that level. Now notice I'm using a down candle prior to that new day. That's okay. You got to use the previous day's session sometime. The down candle here is where it's being capitalized. They're buying up more of it. So the institutional sponsorship should be justified by saying what? The down candle being violated on the upside, which you see it here. So when price comes back down, it doesn't come right down to on price. I don't want to give you every possible, perfect scenario. And then we see another opening price, trades down, but we get a down candle here, and it's violated on the upside, so this becomes a bullish order block. So you can be a buyer here. So now think in terms of Power 3. Power 3 is the concept I teach as it relates.
So, y'all remember from last time I showed this, and Todd right away was able to pull up Power 3. Because Todd, you never saw this video before, right? Hold on.
I haven't. I haven't, but this is amazing.
Yeah, no,
Exactly.
I've never watched the core content.
Yeah, and that's what I'm saying. But look how you were already able to pull up Power 3 from what I was explaining to y'all. Now, does that not look exactly like what I was showing you guys? Where is it? All right, where the hell is my thing? Oh, sorry. Does that not look like exactly what I was showing y'all last week?
Yeah, it is.
It is. Yeah.
Okay.
He's adding another piece to it, and like I feel like I'm ready to listen now. Right? I never listened to nothing. And now I understand everything he's saying, and I don't even know that stuff. Like that's crazy.
Yeah. And then let me go back to the video. Now he was doing daily, right? You know what I looked at when he did it? Because what we do, we swing trade, right?
Hey,
Here goes the opening of the week. Look how it expanded from the opening of the week.
wait, hold on.
Very-
We can't see nothing.
Oh, yeah. Oh, hold on. Sorry. Thanks. Here, where are we at? All right. Look at the opening of the week. Look how it expanded from the opening of the week. You had some correction, of course, but look how it expanded, right? So it respected our week opening, right?
Yeah.
Correct? Everybody agree? Yeah?
Yeah.
Okay. So, because he was going daily, right? So now, oops, hold on.
It's to the daily open, high, low, and close bar.
Closing you. Now, where are we at? Shoot, stop share. And
Hey,
I'm about to pull up something.
hey, Ish almost walked away from it. She was like, I'm tired of this. And she done got the whole group on her side. Hey,
Where we at? Share. Sure. Yeah, where we at? Oh, there we go. Okay. So, all I've been doing was, forward testing this. So remember what he said, here's the opening. Look, remember liquidity void, right? Under it. It's break a structure over, right? We're focusing on the opening. It expands away from the opening. I know, so just
And the liquidity void is the imbalance, the
it's
fair.
the imbalance.
Yeah.
Yeah. So institutional sponsorship. Whenever you guys hear me saying institution, leave me alone, OG, and stop making fun of my voice.
I didn't say it. I didn't say it.
I hear you.
I didn't say it. I'll take it though. Anybody want to throw shots at OG? Go ahead.
The liquidity voids okay, so you have the order blocks with imbalance. So I'm saying order blocks with imbalance, as we were looking for the institutional sponsorships, that's the one that you want to see price taps back into and gets back in for the trade. Okay. What else? And just to give you guys some more just logic. All right, here this is this week. All right, here we go. So here we go again this week. And I know some other people took some other trades that wasn't on the list and used the Sunday open, Sunday, Monday candles. And it worked out for them. But we got the Sunday, Monday. So this one, for the block, but price never came back into it until back in here again and traded away from it, right? Let's see. Some other tips too. So was it GN? Was it EN? I think it was GN. Okay, so remember GN last week? Remember the last week objective for GN was for it to get to the 78.6. It didn't quite finish that. It only got to the golden zone. Then it finished out 78.6 and then went on to what it was going to do this week and pulled back into this current week's 78.6. So I know a lot of you guys don't like, well, some people just don't use vids. I love them. This is just my thing. So you don't have to use them. Do your own thing. ICT he does everything on the 1 hour and he explains everything on the 1 hour. So that is why I use the 1 hour. I can't make it my own unless I mirror the source's logic. Okay. So I can't make it my own until I do his thing. Okay.
But
So that's why I use the 1 hour. Say, sir. Go ahead.
okay. Even with this picture, right?
Yeah.
You can clearly see, you can see an up move that broke the highs, right? Up there to the 78.6. Then immediately price comes down and breaks the lowest low. So if you put that together, that is a bearish order block. Now price trades back up into that order block. And if you feel from the top to the bottom, we're in it traded back into a discounted rate, like over 50%.
Yes.
So just by understanding how trades move, you can deduce this is about to fall. Price is about to
Yes.
And you don't need to necessarily look at a higher time frame. I mean, you can. If you do look at a higher time frame, you're going to eventually see a bearish order block. But if you just look at the structure that's on the chart and you understand what this means, that from the bottom when it traded up, that's institutional push. That's an order block. That's what he was saying, order block. So that's all you're looking at. If you can see this, it doesn't matter what time frame you trade, then you can take advantage of it.
Yep.
So you have the people who are brand new, you have the people that are intermediate and advanced, right? We're all supposed to know this from top to bottom.
Yeah.
Everybody is supposed to know this. No matter what a person is trying to get across to you, when they're, when the advanced is lacing everyone below, everybody in this level of giving information is trying to get you to see this. Every single thing that's taught is based on this. Once you understand it, you can layer everything else on top of it. but you have to understand structure and price action.
Mhm.
Everything relates to this, right? When you get there, you're telling people that and they don't know what you're talking about, right? Right. You don't know it yet. Once you get it, that's the set. It's a pattern.
Mhm. Does everybody know what Todd is talking about as far as the discounted premium and price having to get to a over a different level before it moves? Just the way price will move? Why it moves from one side to the other? Mm. No, nobody's answering me. All right, that's fine. Okay. I know that was
So,
you, Todd, this time.
we have situations where people are consuming the information. That's great because, when the food is good, people aren't talking. So I always look at it that way. I make sure I fill it in, right? If anybody gonna say nothing, I've got to make sure I have something to go to all the time. That's why I'm talking all the time. There's always something to talk about, right? So that's how I do it, right?
Well,
That way I won't be offended if people aren't responding because they may be busy. They may be writing things down. They may not be able to get to the microphone button. Like stuff like that be happening, right?
yeah, I really wish that was the case. I laugh or I chuckle because the 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 dullness or nobody says anything, and that's kind of standard practice. I really think that people really they still don't get it,
They
and
don't get it.
yeah,
Yeah.
which is okay, because we all start from where we start from, but at some point it's going to click, and whether it's Ish saying it, ICT saying it, somebody else in the group saying it, we'll just keep saying it, and somebody will say it in a manner that you will understand at some point. And,
Mm-hmm.
and then once you start seeing it, you won't be able to stop seeing it. So
Right. And then you'll talk about it
there you go.
because
So
you're excited.
yeah, and you'll see like it actually works. You're like, man, I can actually rely on this stuff. You won't be like,
Hey,
how did such and such know that it was going to drop? Or it's
Mhm.
because of the structure. So just my advice is everybody has to go find the information, right? Just like Ish did, she tracked down this core content. You know, go find the information, and don't stop until you find somebody or something that allows you to be able to receive and digest what they're talking about. You know, to me, ICT is a great source, a brilliant spot, and he knows his stuff. But to some people, they don't like his delivery. So maybe that's you, but you have to find somebody that can deliver you the information in a manner that you can digest it. And sometimes it's just not the person. Sometimes it's just you're not ready to receive it, and that's cool too.
right.
But you have to be mature enough to say, hey, I have to get better. And that's all I don't want to beat a dead horse, but that's why I was snickering each, because I just thought it was almost like deja vu, like you question, then nobody's saying anything.
And we'll keep it out there. That's why I reach out, because some people don't know the question to ask. And
Yeah,
I
that is
want to
true.
always make sure people understand that our group is different. We're gonna reach out, right?
Yeah.
I'm gonna reach out. I'm reaching out to the whole group. Like I'm not just talking to specific people. I'm talking to everyone. Like if you really want to get it, you need to sit side by side with somebody who gets it, right? Whoever it is, give it a shot. Whatever time for me, I got time, right? So if you want to hang out with me or whatever, we can, whatever on your time. I'm always on everyone's time. Ever since I started doing this, people have had full access to me. And that's what people in this group don't know. We've been on Zoom meetings for like 3 days straight, just talking shit. So that I'm used to that. I'm kind of getting away from that because I put a lot of time into that, and the results are awesome, right? But we should be as a group like that, right? It's more of a family thing because we want to teach the kids, and we need to get people in place that are closer to that demographic. We have a whole lot of things we could set up here, and we're just getting started right now. So stay tuned.
What'd you say about the 78 ish? Sorry, I was pretty busy.
The 78, I was saying about when so last week objective for it to get to 78, it looked like it wanted to get to the 78. It got back to Sunday's open and respected Sunday's open, right? So it finished out what it wanted to do for last week. This week this is our new fib for this week, right? So price went ahead and did that and did this move. So it finished out last week and went ahead and took care of this week's move, right? All right, so the fib levels. I hope I'm saying it right. Y'all could correct me, I don't mind. All right, so we are buying at we're selling at a premium, buying at a discount, right? So price has to get over at least the 50%. The price even just gets a little bit over the 50%, because sometimes you'll see it'll tap into the 50% and react. Sometimes it doesn't go to the 61 or the 78. But I like the 61 level.
Me too.
And you'll see it move.
There you go.
Go ahead.
I'm not gonna mess with it if it doesn't go to the 62. Or 61.8. 61.8 to the 78, I can get involved.
Yeah.
I'll protect a little bit past the 78, maybe the 88, right? And I can sell it. Or buy it, but I'm not going to get involved at the 50. It's just, for me, I'm not trading a 50% pullback anymore. I'm too grown for that. I've done it before.
You see how they're having that conversation. A lot of people don't know how to get into that conversation. They don't know what that means, right? Once it's the standard, right? You see why. You can choose the 61 or you can choose a 78. These are facts. This is happening. Like, don't let it pass you. Why would you do the 60 when you could do the 78? Stay out of trouble, especially if you're new. Stay out of trouble. Just go to the 78.
Right.
If you're going to lose at the 78.
Okay,
I'm sorry.
Everyone, this is Rosa. Okay, and that's my problem. See where price is right now. I would take a sale there. And I know, and I can see what she's saying, like get to the 68 or the 70, because for me, that's where I get in trouble. I always get in right there. And to me, like, I see that's the middle. And I get in right there to take my position. And that's where I get caught up, because it may never go
to the 78.
Or 78, yes. And that's my problem. That's what I do.
So Rosa, I would have gotten involved. In fact, I tried to get involved, not with this one, but EA. And then price kind of stalled out. And I just say, you know what, I'm through with this. I'm going to trade GU. So to me, it's nothing wrong with getting involved. If you look at that fib, this went past the 61. This went in between the 61 and the 78, which is I'm very comfortable with that. I can take that trade. At that double top, you could have sold it based on where it was, or you could have waited until you see that push down that broke that low and gave you that breaker block right there. And then it created that imbalance. You could have waited till it traded back up into that imbalance for the sale. However you want it to enter, that's your baby. But I would have definitely got involved if I was trading GN right there. I don't have a problem with that. But here's where the kicker comes in. Even if you get involved right here, in my opinion, your stop loss or your hedge needs to be about the 78 or a little bit above the 78 in case price wicks up there or goes up there. You see where that imbalance is? The concept of encroachment to me is at the 88, right? The breaker block at the 88. If you protect to that level, then this trade, you'll be fine. The problem with people, and we're people, the problem with us as traders is we've been brainwashed into thinking that the only way we can win is with that 2 pip stop loss. And I would contend that that's a god dog lie, you know, because here you have a trade that's about to drop 300 pips. And I would say to somebody, just get in the damn trade. Let it push down and break this low down here and pull back, and then you can get in with another position with a better risk to reward or whatever. But the 300 pips is what's going to pay you, not the 2-pip stop loss. So you know, you have to figure it out as the trader where your skill level is, from one, because some people can get a 2-pip stop loss, and more power to them. But we're not being realistic as traders, and that's what causes the losses or the non-growth, right? Because if you know this is dropping 300 pips, if you make $1 a pip, that's $300. Put that in your kitty. Grow your account. You know, if you get 2 positions, that can be $600 at $1 a pip. You know what I'm saying? Like, we're not thinking clearly sometimes. We live in a realm of euphoria, and
I think it's paralysis, bro. I think it's paralysis.
Maybe it is. Maybe it is.
And having someone near you to keep reminding you of certain things until you don't need the reminders anymore. That's what I'm getting out of it. Like a module where you're in a trade setup with a bunch of people, and in this room we're trading with the trading wheels on. And now in this room, we're going to start seeing who's figuring it out, and we're going to start putting y'all over here, and we're not going to give y'all the training wheels no more. You guys are going to be in this room, and then we got to see the reaction, right? We're going to see the results. If we can put this together in this style, then everybody knows what to expect and knows what to be accountable for. I mean, it's just an idea. That's how I'm thinking, because people don't even know what they're looking at. Like, they need someone to stay on them about that. It's up to them. I think it'll work, but you got to want to do it.
Did anybody take this trade?
Yes, sir.
Are you still in the trade? The short?
Nah.
You just took
I bought it up and then sold it down and bought it up again, but I got the buy, actually.
Okay.
Yeah, but I know it's gonna sell, so I mean I'm waiting on that.
Right.
I've been in it since the beginning of the month, but you know, y'all know I had a catastrophe Tuesday night. But I have one
Is that
position that I
Selena?
opened. It's me, Baba.
Selena, did I not? I ain't tell you it was gonna buy up. I said it was gonna come down here and buy up.
I'm sure you did, Baba. Whatever was said to me that night, it was not taking hold, because that was stressful. But I've been in this since the beginning of the month, because off of the monthly, I knew it was going to sell, but I have a very small position in another personal account that I just let run the entire month because I knew it was going to sell. So yeah, I'm still holding strong to that one.
But did you add an entry when it came back up and tapped in right here? The answer was no. So this is where you fail as a trader, because you can read all this price action. You can read structure. This is clear as day right here. This move is clear. It's not even a question. If you counted every one of these 1-hour candles, you can see where the order block is, like what time frame that bearish order block is on. It's
the whole video that we just showed.
Well, I know, but I'm saying in my opinion, when you trade, okay, hey, can you do me a favor, Ish? Can you start walking up in time frame? Can you go to a 12-hour time frame? In my opinion, when you trade, it's all about the picture that you get, right? The picture of the market is what calms you down as a trader, because you might not be comfortable trading structure, but you're comfortable trading order blocks, right? Or you're comfortable trading whatever. Okay, go. So that's a bullish order block. Go maybe 14 hours. $18. 20 hours. 22 hours. I wonder how many candles that was. 26 hours. Not applicable. Can you do 30 hours? Okay, just go to the daily. Let me see what the daily shows. Okay, on the daily, you can see a tap in, and then you got a doji. I guess if you can follow this, go back down to the 8 hour. Because we're not going to get, I was trying to find the point that would have gave us the bearish order block. Okay, so this 8 hour, you get a bearish order block with a tap in, right? And maybe the 7 hour, it might even be a little bit more clear. But when you have a picture that conforms with your ideology, right? So from this 8 hour chart, in my opinion, this gives you everything that you would need, to include the level of confidence that you would need to sell this, right? Or to anticipate a sale from this, because you get the 5 down candles, right? The push down, the market pushing down, breaking a swing low, trading back up into that imbalance, where it wicked out. You see the imbalance that it wicked out at? Go up to the top. I mean, yeah, right there. That imbalance right there. Price traded back up into the imbalance. If the way ICT always explains it is you take a short there, you put your stop loss above that high, right? As a matter of fact, where those words of previous week is probably where your stop loss would have went, and you would be in a trade, and this trade would play out with a high degree of accuracy, and you would target the equal lows, right? That would be your first TP. The swing low down there. No, the new one, the new swing low. That one right there. Because that's where price just came from. That would be your first target. And then that next swing low, the next lower swing low, will be your next target. So if you understand these concepts, all you need to do is find a chart that backs up what you're looking for. Like when you saw on that 1 hour chart that we created a bearish order block, then all you need to do is start going up time frames until you find the time frame that gives you the bearish order block. And then you can trade the bearish order block. Does that make sense? Hopefully I'm not confusing people.
I think your explanations are getting better, and your timing on when to say that part, right? Because that part needs to continually be said. But it's like we have to bring it from the back of our mind. It's something like that. I just get stuck back there somewhere, right? But that needs to be heard a lot.
Yeah,
rolling up the Rolodex, right? To get to the time frame that shows you the block, and then you play the block. Right, that is a technique, and if you don't have any technique, it's like you're shotgunning. Right? You don't want a shotgun.
Exactly, and if you think something, just say something. Like if you think you see an order block, or you think you see a trade setup, but you're not sure, go to that chat. This is a GBP pair chat. Drop it in the chat and say, man, I think I see a bearish order block, but I'm not sure. Then maybe somebody else knows how to pull up the Rolodex and drop it in the thing and say, you're right. It's a 8 hour order block, or it's a, whatever. to me, if you can get to that level, if you trade order blocks, if you trade like this, then it cleans up a lot of the mystery behind what you're trying to do. Because once you get the order block, then it's easier for you to drop down and understand where the pullback is going to happen and all that good stuff. But that's all. That's all. I don't want to steal your shine, Ish. I just wanted to kind of add on to what
No, you're fine. I had like 15 minutes of voice. Go ahead. What else? Hold on. All right. Let's see. Okay, we marked up this trade last week. Let me go. All right. Yeah, I remember we looked at this last week, right? OG just picked a random pair that was looking. And I was just telling you how I'll just mark it up. So I leave it this is the only things on my chart just because I want to be able to make any decision that needs to be made and not be held into a particular bias. Although I have my bias, I'm looking to see if it plays to my bias. If it's not, then if this is quick for me, it's easier pivot. I also include like the Cordage theory logic as far as objectives. So you have the 0, the 27, and the 61. So these are the objectives, right? So this is Sunday, Monday's open, made his first objective and got to his second objective. So that's how I'm looking at it for it to go. It only did this much into the imbalance. So I am looking for it to come back and return back to this. But you see how you could use these marks to kind of like map out your trade. Does that make sense?
It does.
Okay.
And this week it will drop back down into that blue box.
Okay. All right. Cool. That's about it. I don't think I really have anything else as far as going over. What has helped me is just going back, and I've been doing this even when I wasn't doing the weekly order blocks, is I would go through all the trades and do hindsight. And of course, hindsight is awesome. I mean, that's with anything in life, anything that happened in you in life and if you didn't have a favorable outcome, and you're like, man, I should never have done that, or I should never said that. And hopefully you've learned your lesson. And if that situation presents itself again, you'll be able to, react efficiently, the next time it presents itself. So that's just all this is, going over the weekly trades. I didn't seriously start getting into it until maybe 6 months, maybe even later. Going over the weekly trades and seeing what moves I could have taken. Okay. That's it. So I mean I like doing this, but I mean my intentions are not exactly all altruistic. I get a lot out of this myself. Okay. But that concludes my demonstration class, whatever.
So I'm gonna reach out and say, well, first of all, awesome job. And my sister, veteran sister, actually, and the amount of output, right? Some people don't want to do it all the time, right? Well, maybe do it once a week or something, like, because you need to be heard. People want to hear that, right? People want to hear specifically what you're talking about, right? So maybe do it once and then, okay, I'm going to do it once a week. And then you figure out, okay, maybe I'll do it 3 times a week. And then you figure out that balance to where it fits exactly what you want to do, because you're really just doing what you want to do, right? So make it work for you. That's my critique.
You talk about me, OG?
Well, people just don't like to do it all the time, right? I don't either. I'd rather somebody else do it, right? You're at that level now where it's time for someone else to come in and do some things. But certain things they can't do, like Ish. So Ish got to do Ish stuff.
I agree. And I like to say thank you, because
Thank you.
you know, this is it's what it's what everybody needs. All right. I'm going to keep with the same pair.
Thank you, Ish. Great job.
Thank you. You want me to unshare screen? I click on the screen now.
No, I think they have my screen now. Can y'all see my screen?
Thank you, Ish. That was
Yes.
awesome.
Thank you, guys.
Yes.
Yeah, you changed our trading for sure.
Thank you.
Each,
Are
I
you
think this is
checking out?
I think this is the area that each had marked up in our blue box. Which, if you
Yes.
pay attention, that is the area, Ish.
Yes, that's it.
Okay, so I'm glad, because we don't trade the same, or we don't use the same time frames, and we don't focus the same way. All I did was take the 2-week candle, because we finished with 2 weeks. I fib it. Here's the golden zone. There's the 78. I can drop down to the 4-hour, but just because Ish was using the 1 hour, if you look at the 4-hour, that's a huge imbalance. But if I just drop down to Ish's time frame on the 1 hour, this is the blue box that she had marked up, which is in between my 62 and my 78. So I'm looking for price to come right there too. If I look at this impulse move, we come up and make a new high, immediately come down and break the lows, right? We broke the lows. We know we're dropping down, right? That's the telltale sign of us breaking down. So maybe we go up here and we sweep again. Maybe not. Maybe we just push down, but we're taking a trade down south, you know. So basically what we're looking for is for this trade to push right into our zone, right? So this is 400 points on the NASDAQ just to get to the 62, because that's where I'm, 62, I'm looking to get active to buy. But let's just say you sell it down and it goes, to the 78. That's about 550 points. These are moves that you can take. You can use a NASDAQ mini, where you can get paid a penny a pip. You can raise your pennies, you can add to it. It's relatively not dangerous, Selena, for traders that are scared of the innocent. But you can use a mini and get these types of moves, right? And it'll do a lot for your confidence. We don't know how long it'll take. Maybe it takes 2 days, maybe it takes all week. We don't control that. We just know that this move is upon us, right? Because price pushed up, and now it gave us a chart move that it's going to push down. So all we're doing is waiting for the push down. All of these indices are basically pointing in the same direction. And no matter how you come across it on your analysis, whether you're doing your analysis based on the 2-week candle, maybe you're doing it on the 1 week, and this is what I always try to get people to understand is, the analysis is the analysis, Brett. Like, it's either going to play out or it's not. All you got to do is do your analysis and have the chart marked up. Put your alerts if you're going to trade that pair, because you don't have to do anything until price gets to your level. If you look at this is a 4-hour bearish order block. We tapped in. All we waiting on is the drop on the US 30. Again, you can use the mini if you're scared of the speed of this joker. But these are moves that can be not only anticipated, but really relied on, because you understand the concept and the reasoning why this needs to happen. You see the big A imbalance. You see it. You can't deny that imbalance. So it's probably going to happen. I'm going to add a video to our viewing today. The imbalances and okay. Hey, my brother has to reset the router. So can y'all hear me?
Yeah.
So we might get lost while this happens.
Oh, okay.
Hey everybody, I hope you're all doing well. In today's video, we're going to talk about imbalance and inefficiency and how we can utilize this concept to add confluence to our trading ideas. So to get started, we're looking at Australian dollar versus US dollar, and we're currently on the 15-minute time frame. Now, in front of me, I have a clear bullish leg, so we should only be looking for buying opportunities. Now, to do that, we have to locate recent breaks of structure, because every break of structure presents a possible entry opportunity. So we have a break of structure here. We have another break of structure right here. A minor one, but it is a break of structure nonetheless. And another one that stands out to me very clearly is this one right here. So now that we've outlined 3 breaks of structure, we can locate our points of interest. In this case, it would be demand zones because we're looking for buys. So we have a demand zone right here, right? This was the point of origin that caused the break of structure. We have